So you've probably heard the term bank run thrown around on the news, right? It sounds like something straight out of an old black and white movie, but it's actually a financial threat that is very, very real, even today. So let's get into it. What exactly is a bank run?
Okay, let's just jump right in with a little thought experiment. Imagine you're scrolling on your phone and you see a news alert. It says your bank, the one with all your money in it, might collapse. What's the very first thing you do?
Yeah, I'm going to go out on a limb and guess your first instinct is to get your money out, like right now. And you know what? That's a totally logical, completely understandable reaction. You're just trying to protect what's yours.
But here's the thing, you're not the only one who saw that news alert. Thousands, maybe even tens of thousands of other people who bank at the same place are seeing it too. And they're all having the exact same thought you are.
And they're all about to do the same thing at the exact same time. That sudden, massive collective impulse, that is the spark that starts a bank run. So let's put a name to this phenomenon. What exactly is a bank run? Okay, so here's the textbook definition. It's when a whole bunch of a bank's customers try to withdraw their money all at once. And here's the crazy part. It's not because the bank has failed, it's because they're afraid it's going to fail. The most important word here isn't money, it's fear. All right, to really get why this is so dangerous, we need to talk about something kind of like the banking industry's big secret. It's not really a secret, but it's something most of us don't think about, and it explains everything. So, here it is. When you deposit your paycheck, the bank doesn't just stick it in a big vault with your name on it. Nope. They keep a little bit and they lend the rest out. They're funding mortgages, car loans, new businesses. That's actually how the whole economy works. Your money is out there, doing stuff. Let's put some easy numbers on this. Imagine a little local bank has, say, $1 million in total deposits from everyone in town. Now, out of that $1 million, the bank might only have like 10% of it, so 100 grand, sitting in the vaults as actual cash. The other 900,000, it's out there in the world as loans. And this system works beautifully, almost all the time. There's just one rule. Everybody can't ask for all their cash back on the same day. So if things are usually fine, what's the spark that lights the fuse? What kicks off this chain reaction of panic? Well, it could be anything, really. Sometimes it's a legit news story about the bank making some terrible investments. But honestly, a lot of the time, it's just a rumor, something that starts spreading like wildfire on social media. The scary part is, the rumor doesn't even have to be true. It just has to be believable enough to make people nervous. And this is maybe the most important thing to understand. A bank could be totally healthy, run by geniuses, making fantastic investments. But if enough people believe it's about to fail, that belief, all by itself, can actually make it fail. This is what makes a bank run so fascinating and so terrifying. It's what's known as a self-fulfilling prophecy. That's a fancy way of saying that the fear of something bad happening actually causes that bad thing to happen. Just look at the difference here. On any normal day, everything's great. We all trust the bank, we take out money when we need it, and the system is totally stable. But when a run starts, that confidence just vanishes. Poof! Everyone rushes to get their cash out at once, and whatties, the system breaks. The bank literally runs out of money. Seriously, let that sink in. A bank doesn't have to do anything wrong to go under. A perfectly good, well-managed bank can be destroyed simply because enough people got scared at the same time. The fear itself becomes the weapon that brings it down. Okay, so this all sounds pretty bleak, right? Well, the good news is we've learned a few things from history. Over the years, governments have put in some pretty powerful safeguards. Think of them like firewalls to stop this kind of panic from spinning out of control. There are basically 3 big layers of protection. First, and this is the big one for you and me, is deposit insurance, like the FDIC. It's a promise from the government that even if your bank fails, your money is safe, up to a certain amount. That alone takes away a huge reason to panic. Then you've got central banks that can step in as a lender of last resort. And finally, there are rules that force banks to keep a certain amount of cash on hand, just in case. And you know, all 3 of those things are really just about one thing: trust. They're all designed to keep our confidence high. Because when you strip everything else away, our entire banking system isn't really built on stacks of cash. It's built on a feeling. It runs on trust. If this whole thing is still a little weird to wrap your head around, I've got a great analogy for you. Think about a bank like it's a coat check at a fancy restaurant, right? The coat check system works fine because everyone comes and gets their coat at different times throughout the night. But imagine if every single person in the restaurant ran up to the counter screaming for their coat at the exact same moment. It would be total chaos. The person behind the counter could never keep up. Well, a bank run is pretty much that, but with money.
So if there's one thing you take away from this, it's this weird paradox. A bank run is a situation where the fear of a collapse is what actually causes the collapse. The panic itself is the poison. And that leaves us with a pretty big question for today. If we know that this entire global financial system is built on something as fragile as confidence, what does that mean in the digital age? An age where a rumor can spread to millions in seconds, and you can pull all your money out with a few taps on your phone. How strong is that foundation of trust, really?